First Trust submits buffer crypto ETF to SEC as Gensler Reconsiders approach. Disclosure: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. By using this website, you agree to our terms and conditions. We may utilize affiliate links within our content and receive commission. Illinois-based financial services firm First Trust has formally submitted Form N to the U.S. Securities and Exchange Commission (SEC), notifying the agency of its intentions to launch a crypto-backed exchange-traded fund ETF. According to the prospectus submitted to the SEC on December 14, the ETF would be called First Trust Bitcoin Buffer ETF and will not be a spot Bitcoin ETF. Explaining the rationale behind this decision, First Trust revealed that the fund would participate in the positive price returns before fees and expenses of the Grayscale Bitcoin Trust or other ETF-backed crypto product that provides access to the performance of the foremost crypto asset. Asset manager First Trust has filed with the SEC for a hash Bitcoin Buffer hash ETF intending to help investors mitigate risk by targeting downside protection. Pick Twitter.com/FS5@BobsMKZ. Satyam Singh at Satyam 446 December 15, 2023 providing more details on the buffer tag of its Bitcoin ETF application. The firm explained that the ETF would serve as a cushion against the initial 30% of the underlying exchange-traded product ETP losses over a target outcome period. A buffer ETF, also known as defined outcome ETFs, differs from traditional ETF products by offering investors a determined investment outcome while imposing limits on a stock's growth to protect against market losses. While other ETF applicants such as BlackRock, Grayscale, Fidelity, and others pursue the spot Bitcoin ETF route, First Trust is setting the pace with its crypto-backed buffer service. Expect to see other entrants after First Trust. In its 32-year record as a financial services firm, First Trust has focused on issuing ETF products and other financial services like investment trusts and mutual funds. The institution's recent interest in a Bitcoin ETF represents another significant move by a legacy financial institution in the crypto market. Bloomberg's ETF analyst James Seyffart has since reacted to the First Trust Bitcoin Buffer ETF, labeling it a unique strategy in a two-year walk-around dance with the Gary Gensler-led Securities agency. Seyffart also stated that he expects more Bitcoin ETF applicants to go the First Trust route in the coming weeks. First Trust just filed for a hash Bitcoin Buffer ETF. These types of funds protect against a set % of downside loss with capped upside. Expect to see other entrants in the space with unique, differentiated strategies offering Bitcoin exposure over coming weeks. H/T at Vildana Hadrick Pick Twitter.com/1KWF53M0. James Seyffart at JSafe December 14, 2023. Meanwhile, Gary Gensler has revealed that the SEC is taking a new look at Bitcoin ETF filings following the District of Columbia court intervention. The SEC chair mentioned that there are currently 10 to 12 spot Bitcoin ETF applications being reviewed by the second. The former MIT blockchain professor also added that the SEC is evaluating every application before giving the nod to a spot Bitcoin ETF. Just in, SEC Chair Gary Gensler says they are taking a new look at spot hash Bitcoin ETFs based upon court rulings. Pick Twitter.com/MFifterLBROK Watcher Guru at Watcher Guru December 14, 2023. A spot Bitcoin ETF approval is expected between January 10 and 15, 2024. According to James Seyffart. Okay, we're nearing in on deadline dates for 3 spot hash Bitcoin ETF applications. I want to get ahead of it because there's a pretty good chance we'll see delay orders from the second. Delays would not change anything about our views and 90% odds for 19/4 approval by Jan 10, 2024. Pick Twitter.com/LS7SAlham. James Seyffart at JSafe. November 14, 2023. Additionally, asset management firm BlackRock submitted an in-kind prepay redemption model to the SEC for its spot Bitcoin ETF application on November 28. According to BlackRock, this new model will make it easier for traditional financial institutions to hold Bitcoin on their balance sheets and for shareholders to buy its shares using traditional fiat currencies. BlackRock's amended filing suggests regulators want cleaner link to on-chain activity for broker-dealers. Here is their revised filing with C-Spot run example of differences. Original in-kind model using an analogy. Imagine you're at a farmer's market, the ETF market, with pick Twitter.com/HXQHOTRRM. Thomas Young at Tom Unger November 30, 2023. The model is also expected to provide superior resistance to market manipulation, which has been a major concern with the SEC in recent years. Enter your email for our free daily newsletter, a quick 3-minute read about today's crypto news. Sign up. The site is protected by reCAPTCHA and the Google privacy policy in terms of service supply. IMG SRC equals HTTPS//SIMG. co/p/ml300 jpeg alt equals image class equals imgid equals newsletter pop-up img